I like this song, Nick. You can put this one more times. GM, we are back with the Dollar Trade Show. Best vibes in prediction markets and contents. And today with us, we have Johnny from Prospect Markets. What's up, Johnny? Welcome to the show, man. Great to have you here.
GM, thanks for having me. Been looking forward to this for some time now. So finally on the show and excited to chop things up and talk about everything prediction markets
Amazing.
and beyond.
Amazing. I don't know what you did, Nick, but you are really zoomed in the camera. I can see everything in your face like this. Okay, guys, let's get
Oh,
started.
oh, I got it now. The camera is just really close to me. I was like,
Yeah. Guys, you know how it is. I'm going to share my screen. Let's talk to Johnny about what they are doing at Prospect Markets. And after that, we are going to go over some content and we have a shit ton of things happening as always. So we have insider trading, non-insider trading markets. We have the war markets, unfortunately. And so let's get started. Hey, Johnny, please, for those who don't know you, let us know who are you and how did you get into the prediction markets world and what led you to prospect markets?
Yeah, Diego, thanks for the warm introduction. I think before I get started, been in the space for some time. I think like a lot of guys, just first as an investor, right? So started getting interested in Bitcoin in 2016. Uh, you know, feels like a long time ago now. I didn't realize almost 10 years have passed since then, right? So time really
Hmm.
flies. Um, During COVID in 2021, me and a group of guys decided to become builders, and so the company we started was actually focused on fantasy sports, so on-chain fantasy sports. So think something similar to like a Silver or a NBA Top Shot, where you'd buy packs of NFTs of players, you'd stake them, and we developed our own protocol at the time called Proof of Performance that enabled you to essentially manage your portfolio of NFTs. Um, uh, uh, Based off of real-time matchups and everything else. And our proof of performance algorithm would translate real-time sports data into uh, rewards in the form of our native token. So that was kind of our first foray into into our long-term vision at the time was to build this fantasy sports company and then eventually morph into a betting company. And I had met a good friend of mine a year and a half ago at a conference, actually Tokens, and he was telling me about what he was working on at the time, which was actually an AI agent that was arbitraging between prediction markets and betting markets.
Hmm.
So if you take a step back, right, and you look at like some of the fundamental differences in business models between betting markets and prediction markets operate prediction markets operate as a peer-to-peer exchange, right? Meaning
Hmm.
the the operator isn't necessarily underwriting the risk of all the individual bets, whereas in a betting market, you're underwriting everything, right? And if you look at like, I'm obviously based in North America. So the two big operators here are FanDuel and DraftKings, right? And
Hmm.
so these guys offer, 10,000 plus different lines every single day, and they've got to underwrite all of them, right? And if you look at like consumer behavior, your typical consumer really focuses on maybe 10% of the bets out there because they're the most profitable, and then
Hmm.
they might use some of the other 9,000 bets for different various reasons like parlays and other things. um, but those are what I would say called like the tail, right? So you've got the mass market focus bet and you've got the tail. Now if you're looking at how a betting market works, those odds are typically figured out or priced based off of like statistical or historical based data, right? So you'd have a
Hmm.
bunch of
Hmm.
data scientists that would come up and price certain bets, or they'd build models. Um, and so if you think about it, pricing the mass market odds are, it's a profitable endeavor, but then you just don't have the time or the resources to do any of that. So what you actually end
Hmm.
up happening in betting markets is you have a lot of mispriced odds, right? And I
Hmm.
think
Makes sense.
what betting markets do is they started rolling out these products called parlays, right? Parlays are basically a series of bets that are strung together, and what they would do is they would obfuscate the implied odds and the implied payouts by creating parlays, right? And so even if they mispriced certain odds, they knew that if you combine them with others, that they would still be profitable because they would just price the margin after the fact, right? So say you picked five separate odds, and the implied payout was, you know, $1,500. They would just offer you 1,200, and so they'd already have 1,300 $300 built into their margin, and so they could do a profitable bet. Now, why this is
Hmm.
important for my journey into prediction markets was what my friend was building was autonomous AI agent that would bet on the tail of sports books, and they would hedge on prediction markets, right?
Okay.
And so if you think about why this is a really powerful concept and how this kind of goes full circle is as everything becomes more on-chain, more quant driven, more agent driven, the emotional side of things starts to come out, right? Meaning, you know, the behavior that a human has, which is betting on the mass market odds, is going away because now you've got all these agents and other essentially quantitative strategies that are just looking for the best price, right? And so if you're a sports book and you're offering 10,000 different odds, you leave yourself exposed because you're basically underwriting risk across the curve, but you've got these strategies that are exploiting you at the tail, right? And so you actually
Hmm.
don't want to be in a business model where you're underwriting and taking odds. You actually want to shift your business model to, uh, a fee-based type of model, like a prediction market, where you actually don't care about what the outcomes are at the end of the day. You're facilitating
Hmm.
those trades, and you're letting other people, speculators, take risk on the outcomes, right? And so this
Hmm.
is how, when I started looking at the space and how to evolve our business. We decided to just move completely away from the betting model and go all in on the prediction markets model.
Yeah, and with this fee structure, basically they became the middleman instead of the house. So they facilitate the meet of buyers and sellers of positions. So it's what they do. And yeah. And okay. So
And
what go
yeah,
ahead, yeah, please. Before
yeah,
I
yeah. So I'll just add this one thing. Like if you so my background's in finance, and if you look across like the market, uh, you look at things like exchanges, right? Whether it's a stock exchanges or other types of exchange businesses, whether it's derivatives or prediction markets or other things, they tend to also trade at high market valuations, right? Because you're not putting capital at risk, and because you're essentially just brokering or earning a fee based income stream, you actually trade at a much higher multiple, and so that's why it's also a much uh, more attractive business.
oh
It's
he
sportsbook,
froze.
which
Oh,
trades at a
you're
it's
back, you're
considered
back.
like a low. Sorry about that.
Hmm.
But if you compare
No,
it to say like
it's
a
okay.
sports book, it's technically considered a low multiple business versus an exchange, which is like a higher multiple business.
Hmm. Hmm. So and came to specifically what you guys are building at Prospect. So I see reference here. If I go to join now, it's not live yet, right? So you guys can hint when do you plan to go live with a beta, with a closed test net, or
Yeah.
Do you have a clue on the
Yep.
date? Can you share with us? And I see you guys are mostly focusing on sports. So can I assume you are building prediction markets exclusively focusing on sports?
Yep. So Diego, I want to preface a couple things. So first, we're a publicly traded company, so we're listed on the Toronto Stock Exchange. So with that, there are certain things I'm able to talk about, certain things that I am not able to talk about. So just wanted to put that out there. So
No,
if
no
I'm
problem
in
at all.
any way dodging any questions, it's only because of just disclosure rules. But if you think about, we look at our company and what our core competencies are, it's really around how we navigate regulatory environments. And
Hmm.
one of the key things that we want to do is we want to make sure that we're compliant in all the regions that we operate, right? So it's not the product that's really holding us back. It's actually getting the right regulatory pieces in place to be able to launch in specific markets.
Hmm.
The markets that
Makes
we're
sense.
most interested in and focused on right now, primarily the U.S., given the regulatory environment in the U.S. And from there, the next markets that we're looking at is Canada, Europe, Australia,
Hmm.
and Hong Kong. And what we're really looking for is regulatory environments that have emerging and favorable prediction market regulations, right?
Hmm.
So
Hmm. Makes sense.
as those start to unfold, then we'll start to launch in those countries. So it's less about an exact date. It's more on when we can get the licenses and everything in place. Once
Hmm.
we have that, then we'll share with the community on a timeline for launching in their country.
Amazing. Yeah, yeah. No, no problem. So if I ask any questions that you cannot answer, just say so. It's not a big deal. But okay. Do you guys are you guys? What's the plan? Are you going to build liquidity from scratch? Are you guys going to create markets from zero, or do you plan to tap in someone else's liquidity? What is the plan?
So it's good. So the answer is it's going to be a mixture of both, right? So we are talking with a couple different parties. We've got our partners, Avalanche. We've also been great at making some introductions on that front. I think it's really difficult as a builder to do everything from scratch in terms of building up liquidity and everything
Hmm.
else. So I think it's prudent to work with third party partners. Um, and then on the market side, it's same kind of thing. Like I've met some of the largest prediction market operators out there, and my view over time is, um, for certain types of contracts, especially ones that are high volume or mass market, uh, you're going to use contracts interchangeably, right? So it's not from using a contract from another company. And then so you
Hmm.
might actually just use a combination of your own contracts and some other contracts over time, right? So I think it
Hmm.
just depends on a case by case. We've got some unique ones that we want to focus on that are a bit different than say some of the ones that are on offer, particularly in the sports vertical. So where it makes sense, we'll use other people or other firms or other third parties, and then when it makes sense, we'll also use our some of our native stuff as well.
Okay, okay. And do you guys plan to make it a kind of an open system so other people can build on top of what you're doing, or do you plan to run this at your own independent thing? What's the deal on that front?
Yeah, yeah. Like in terms of the total user experience, like the app and whether it's the web app or the mobile app, that's going to be more of a closed experience, right? Like we want to make sure that we've got a really rich experience for our users. When it comes to enabling others to trade some of our contracts, I think it just depends on who would definitely be open to opening that up to other third parties or other operators. But I think that's going to be more of a case by case scenario, just depending on the type of operator.
Hmm. Okay. One last question before I move to Nick or something else. So I see you guys here are focusing on sports.
Are
What's uh,
driven by
yeah? So
regular
think he's
side.
yeah, it's breaking the connection. I don't think it's on my. I don't know if it's on my side. Can you hear me well, Nick?
Yeah, I can hear you okay. I think he's breaking up. He's froze for me.
Yeah, he's froze for me as well. Let's wait a little bit. I just wanted to ask about resolution of these markets. What is the plan with that? So let's wait a few moments here before he joins back.
I am interested to know how they're a publicly traded company. Like, how did that come about? Because most of the people we speak to aren't.
Yeah, that's
You know,
true.
like
Okay.
it's like so, like it's like, well, how? What was the decision? That's an interesting. Like, what was the decision around that, and why so early? So it'd be great if he, when he pops back on, if you could ask that little question.
Yeah, let me. Okay, it's reconnecting.
Great.
He's going to be back. So
We'll just be good hosts and not have dead airtime. Can't have dead airtime.
let me. Okay, he's here. You're back.
Sorry about that. Just
No worries. No worries.
rugged out there for a sec. Sorry, guys.
That's
All right.
okay, man. That's okay. So I was about to ask you something, but Nick got some really good question here. So you mentioned that you were trading an open trading company, and this is not common in the prediction market space so far. At least with all the people that we talked to. So how did that happen for you, and how it
Yeah.
has been going so far?
Yeah. How? What was the decision making to become a publicly traded company in prediction market space?
Yes.
Because there actually aren't that many, like globally, if you look at it, particularly this early that without a launch
So,
product. So it's quite interesting to know that journey because it's
so
very different from everybody we speak to.
yeah. Well, and the cool thing is like I think we were the very first, um, technically the first pure play from what we could tell, because we've been public since uh, October, right? So it's
Right.
been some time now. Why? I think there's a big question. Is like I think you always want to play to your strengths, right? As a company, and some people they've got really strong networks within the venture capital space or the crypto venture capital space or other things. For us, given my background, like I've worked on Bay Street and Wall Street for over 10 years. I have a lot of partners that operate in the public equity space. Basically the day after the CFTC and the SEC came out with their guidance in August, and Polymarket raised that $200 million round. I went to my partners and we started talking about ideas, and we started working on this right away. So we were very quick to get on this. And just to give you an idea, we spun out the prediction market business out of the fantasy sports business. We raised capital. We got the M&A transaction approved, and we've got everything approved by the regulators in 2.5 months. And that's the regulators approving a very new nascent business. So it's really hard to do. Typically, that would be like a 6 month plus process, but we were able
Yeah.
to navigate that. And what that does is it gives you a lot of more visibility too, right? As a publicly traded company, I think it adds that level of credibility, a lot of trust. We provide tons of disclosure on what the company's doing, our financial position, who's involved, all that stuff. And I think that's a very important piece of all this. And this was why it ties back to what I was saying, was like one of our core strengths is how do we navigate the regulatory environment so that we can launch prediction markets in a way that is on side with local rules and regulations. And if you look at the top prediction market operators today, they've all taken that same approach, right? And I think if you want to become, a large player in the space, you do have to go down that route, right? Because if you want to be able to tap bigger pools of capital beyond just the crypto money that's out there. And I think that's one of the frustrating things of being in crypto for so many years is like there's not a lot of new blood that's coming in, right? It does really feel like everything's PvP. Whereas if we're going to grow the industry, we really need to onboard bigger pools of capital into the space. And I think that's ultimately, the goal that everyone here is trying to do, right?
Makes sense.
Yeah.
Makes sense. And let me ask you, from the broader picture, doesn't need to be exactly related to prospect market, but so there is this conversation about poly markets raising a shit ton of money from traditional companies and so on and so forth, and they've been teasing the potential poly token. Do you think there is room for a prediction market company be traded on a stock exchange, just like Prospect, and also have a token, like a kind of a dual model? It would be innovative as well. Do you think there's room for this in this space? It will make sense.
Like the devil's always in the details, right? It's how's the token structured? Um, what does that token actually give you, right? One of the things I think that people don't realize is like, and this is my own personal view, so I don't want to offend
Sure,
anybody,
sure, sure.
but with a lot of projects out there, if you've got both tokens and equity, they're naturally at odds with each other, right? Meaning there are interests that are not fully aligned. And I think that's one of the things that is always going to be tough, right? Because like,
Mhm.
if you look at say like on the extreme end, you've got like a hyperliquid where there's no equity. Why that model makes sense for token holders is because a lot of the benefits can accrue to the token holders, right? Whether as the
Mhm.
protocol grows and it becomes more profitable, they can do token buybacks, they can do all these things. Now, on the other side, if you operate an equity and a token model, you basically have to do some things to satisfy the equity holders and you have to do some things to satisfy the token holders. And I think the risk that you do is that it's not balanced properly, or you favor one over the other. And so it can create some issues. Now, if you look at say like a poly market, if you looked at their entire capital structure, it wouldn't just be token holders and equity holders, but there's also debt holders that would be involved, right? Whether it's banks or other forms of debt. And so now all of a sudden you've got, 3+ different interests that you gotta balance. Now my own view is that I like simpler capital structures, right? Like I want people to come in and say, look, if I buy a share of Prospect Markets, uh, you know, I own basically a real piece of the business, and I don't have to worry
Mhm.
about all these other interests that I don't fully understand or don't fully appreciate. If I was Polymarket, I wouldn't go down the equity and the token model. There's a reason why people don't really go down that road, and if they do, it doesn't really work. So I haven't seen anything that has worked very well. I think you got to pick your lane and reward those people that stick with you, right? So if you're going to go down the token side, stick on the token side, reward your token holders, grow the community, grow the business in the interest of the token holders. And if you're going to go down the equity road, do the same thing. I don't think you can straddle both. It's just
Mhm.
you
Mhm.
risk alienating and actually making it too complicated.
Makes sense. Yeah,
And
makes sense.
can you see a benefit to having tokens on prediction markets, or do you just think, because my view is not every business needs a token, right? No, not every crypto business needs a token.
Yeah.
But what's your thoughts on prediction markets? Like, is it useful, or is it a distraction? Like, is it just crypto being crypto and trying to pump something that has no value?
Like
It's like, what is it?
I think token models within prediction markets or other kind of crypto businesses can be useful. Honestly, we've seen them be useful, especially in terms of helping build the community, bootstrap, fundraising, all these other things. So I get why people would want to launch a token. Um,
Mm.
our approach is one, we want to keep the company as simple, as clean as possible, right? So we decided to raise our funding through the equity markets, right? Other projects may not have that option or may not want to go down that
Hmm.
road because it does restrict you being a public company. There's certain things I can say, there's certain
Yeah.
things I can do. There's a lot of costs associated with being a public company, right? Like if I showed you how much I spend on, you know, lawyers and accountants and people that we don't want to deal with, right? It's a pretty big number. So I get why another company, especially if they want to move, like they want to be more global or offshore or what have you, like it might not make sense for them, right? So I think the token model uh, is a viable one that in certain cases will be the best kind of option for guys. Now, I do think that often in crypto, we all just kind of create a token just for the sake of creating the token. And so I think as people are evaluating potential launches tied to uh, prediction markets, it's got to be well thought out, right? Like it's got to have some real benefits and value. And I think the team should be able to communicate why they're doing a token launch, what they're doing with the funds, how this is going to be beneficial for the community and for the investors in the token. And as long as those all things check out, I think it makes sense, right? But
Hmm.
so it's hard for me to use a blanket kind of statement. Um, but yeah, I've seen it. We've all seen ones that have worked, and we've all seen ones that have been like uh, I don't want to say disastrous, but ones that haven't worked as well, right?
Disastrous is an okay word
Disastrous,
for it.
right?
You
It
know,
is
like
what
some
it
of it
Like,
has
is.
I'm,
been not some
yeah,
of
I
it,
agree.
most of it is terrible. Most of it
Yeah.
is caused more damage than it has anything else. So yeah,
The other
and
thing, the other thing that I wanted to avoid, right, and why we didn't go down the token route and we went down the equity route was like I find as a builder, right, one of the things that and one of the frustrations with trying to build a long-term business in crypto is um, your token decides how people view your project, right?
yes,
Meaning you could build an amazing product, you could do all the right things, but if you don't execute properly on your token launch and the token dumps or the timing sucks and the market's not there, you're cooked, right? Because people lose
Hmm.
yeah,
interest, people stop using your product. And so it's actually very risky as a builder to tie your project to a token in some cases, because what you're doing is you're combining a long-term asset with a short-term instrument, and the short-term instrument is highly volatile and you don't have a ton of visibility on it. And so those two things are diametrically opposed as well, right? And like
mhm,
versus for us, like if you look at some of the investors that we've been able to bring on in the public equity market, they're long-term investors, right? Like why are they buying shares in prospect markets? Is they're looking at our business plan, they're looking at the team, they're looking at the growth of prediction markets. Spot trading volumes are up 29x in the last year, right? And they're saying, look, this thing is one of the fastest growing markets out there. Prospect is one of the only pure play prediction markets that are publicly traded,
Hmm.
and we're the only one in Canada. Why, I want to buy some shares in that company, and
Hmm.
I'm gonna stick with it for the long term because this industry is going to be much bigger in 5 to 10 years, right? And I
Hmm.
yeah,
think those are the kind of people that we're trying to attract. And the guys, like there's a lot of I love short-term trading, I love all that stuff, right? Like I'm pretty degen myself, but in terms of like the type of people that I want holding our stock, I want some really long-term
mm,
guys, right? Like whole like real hodlers, right? Like
Hmm.
and I think
yeah,
it's a lot easier to track those in the equity market.
Yeah,
yeah.
makes
I had a
total
friend
sense.
that was talking about TGEs and stuff like that, and he said they were talking about buybacks, so like if you need to kind of know what's going to dump immediately,
Yeah.
and he said you're going to have to figure out how you buy that stuff back, so you don't spend all of your time instead of building trying to maintain the token price. He goes, because you're dead at that point if you're trying to figure out all the time how to keep that token price up and not focusing on the product and the users. And he goes, now that's fundamentally what happens if it dumps immediately. You're just like, well, how do we make this price go back up? Which is not what any builder actually gets into the industry to do. They want to build things and make products that people enjoy, not care about the price of the asset that's associated with it.
Yeah, and then this goes back to the earlier conversation that you and I had about VCs, right? Because I think a lot of times, like when a builder comes in, the moment you start raising money and you start bringing in different stakeholders, whether it's other VCs like crypto VCs or other investors, they've also got different mandates within their investment, and that might also not align with the long-term vision that you have, right? Meaning they might need liquidity. We've all kind of probably been part of those, right? Where the token launches, you start to see some volume and all of a sudden it drops 50% because one of the early investors that owns a ton of that token is just he's using you guys as exit liquidity, as they say, right? So I think you just got to be careful, and as a builder, it's hard, right? Because your expertise may not be in tokenomics or how market structure and all that stuff, and it could kill your project.
Yeah,
I agree.
So in the end, I assume that doesn't matter if you go to the equity model of the token model. Doesn't matter. I mean, if you build a good product that people want to use, people stick around, they come back to use your product, and you can create a real business that generates revenue, you will accrue value. It can be to the equity model or to the token. That's it. And I mean, we tend to create these problems and try to solve them with buybacks and really complex tokenomics, but it's not that. I mean, it's hard, but it's kind of simple. If you have a good business and if you can generate revenue, that's what works. Everything else is just smoke and mirrors.
I agree with that, but I find in the crypto market, right? Like when someone looks at a new project and they see that you have a token, the first thing they'll do is they'll pull up your chart, and if your chart don't look good, like their interest level drops exponentially.
For sure. Yeah.
And so I think this is the one big difference, right? Which is like you could actually build a great business and all these things, but a lot of these users might not actually use your product because they look at your token and it's a huge negative signal to users, right? And so that's the other thing that I think founders got to worry about is like you really do have to manage that.
But I think this is why the holding on launching a token, it's a smart move. So for example, we saw this with Hyperliquid. So they were a working business before they had a token. So Polymarket, it's already I mean, there's a clearly product market fit there for what they're doing, and there's no token yet. So waiting, I know it's hard. It's hard because you need funding to build cool stuff that people actually use. But if you can have the funding before, that's amazing. So you prove that it works, and then you launch a token.
Yeah, so I agree. I think that that makes tons of sense. The issue is, Jeff at Hyperliquid, they had bootstrapped and they already had, the funding.
They had a lot of money before they started.
Yeah, they had a lot of money before they started. That's one. Two, they're a really small team that was basically, I won't say fully in place, but they had a really strong team on the jump. So they were all kind of aligned on that. I don't think most companies or most projects have that luxury, right? Which is like they don't have the funding at the start. They need to attract not just users, but also partners and other employees through tokens. And so that launch is like such an important thing because it's a lot of times like when you're builder. That's why you join a company, right? It's because it's the prospect of the token launch and everything else, and you also want that to happen sooner than later, right?
Mhm.
Poly's a really unique example where I think they were first to market. They had uh, they were able to capture a space very
Mhm.
quickly. They did able to raise money in
Yeah,
the
it was a
private
different
side of
moment.
things.
It was a different moment of the market as well, right?
Yeah,
When they raised
Yeah,
it.
and and like those are all like important factors
Hmm.
in all that, right? So I think that's the beauty of it all. It's like it's kind of like playing poker. You've got all these different outs that you've got to think about, and as a builder, you can't get married too far to one thing. Now,
Hmm.
when I look at like what we do and my decision making, it all comes back down to like what are your strengths, right? Like where's
Hmm.
your network? Who do you know? Who can you call
No,
when
no.
you have a
Hmm.
problem,
Hmm.
right? Like those are the like that should be uh it's like the classic like wartime mentality, right? Like if you've got horses, you want to be fighting on a giant plane, right? You're not going to go into the mountains, right? And if you're in
Hmm.
the mountains, you want to use guerrilla warfare tactics. You're not going to use mounted cavalry and other things. Like for us, like our team, if you look at us on our website, we're a lot of us have strong connections, on Bay Street, Wall Street. We've been operating there for a long time. We know a lot of people. We know the market makers. We know the investors. We know the ecosystem. And so I think that's why we decided to go down that route. Right? So you see
No,
there, like
man.
for example,
Yeah, it makes total sense, man.
yeah. You just
yeah,
got to stick to
like
your
Sasha,
strengths.
Yeah, yeah.
yeah, exactly. Like Sasha on our capital markets team, he used to run equity sales and trading at Macquarie in Hong Kong, one of their largest trading desks, right? And prior to that, he worked in derivatives and equities across a couple other investment banks for over 20 years, right? And so like that's why we're public, is because we've got the
Hmm.
network there, right?
No, it totally makes sense why you guys took this different, and for me, it's really interesting path, and
Yeah.
I mean, yeah, yeah, makes total sense. So before we move to the part where we cover the news, let me invite you, if you're watching or listening to us, make sure to follow Prospect Sports X here on X. Check them website, and there is a join now button here. You can put your email and click this button here so you can get early access as soon as it's open. And yeah, so let's move to the news part that we cover before we run out of time. We still have around 20 minutes. Okay, so Johnny, this part of the show we cover different topics related to prediction markets, and feel free to share your thoughts. If you have any take, feel free to do that. I just wanted to highlight here. This is from Dash. He posted this monthly recap here on prediction markets. So Cauchy and Poly market, as always, leading the notional volume. Cauchy around 20% higher than Poly market, but the number of transactions Poly
So
market has way more.
just
Go ahead, yeah, please.
yeah, I was gonna say, like, Kalshi, uh, tons of respect for those guys. They've just been I really like their business model, right? Like they've really done well to partner with large platforms, right? And I think that's one of the benefits out there, is they really are doing a good job onboarding a wider audience through some of your more traditional um, uh, financial type of apps out there, and you
Mm-hmm.
see it in the numbers. Like they've been growing consistently. uh, they really know how to navigate the regulatory environment, and I think that's why a lot of these financial apps are using them.
That's true. No, that's true. We are still waiting for Polymarket US to see how this competition is going to be. But yeah, they are killing this for sure. But it's
Like,
interesting. They are making greater volume with less transactions.
Yeah, yeah, like, and what I think will be interesting to see is when Poly actually enters the US, who and what kind of partnerships that they have, right? Because I think it's very different being uh, in the US, but just operating as a single entity versus being a partner for a lot of these larger platforms,
Hmm.
right? Because
Yeah.
the beauty about being a partner for these larger platforms is you can onboard 20 million users at a snap of your fingers, whereas being a single operator, it's going to take time to build that user base up,
They're
right?
Yeah.
they're already partnering with some betting companies in states already. They've been doing that for a few months. So I
I,
suspect they're just biding their time
yeah.
to open it up more. I can't remember the name because they're US based, so I don't know them. I can't remember. It's something Picks or
Okay.
something like that. Quick
Yeah.
question about US versus Canada.
Yeah.
Is gambling regulation done at a state is it done? I'm not entirely sure how Canada's structured. Sorry about this, but is it done like region by region, or is it done at a federal level?
I was going to make a Trump joke, but it's probably not appropriate at this time.
His mum was
But
Scottish, so we
yeah,
can make
yeah,
the joke.
but
No, you can make
it's not
jokes.
a
You can make jokes, bro. This is a free show.
no, I know. I was just kidding. I was gonna make a 50. Like, I'm actually a really patriotic guy, so I was gonna make a 51st state joke, but I'm not gonna alienate anybody there. But no, it's done on a region by region basis. So, like,
Okay,
in Canada, we have provinces, and so it's done at the province by province level. There's no big
I just
federal
wasn't sure if it was
regulator.
because in the UK and across Europe, it's done at a governmental level, so you
Yeah,
only deal with one regulator everywhere.
yeah. It's a much cleaner, simpler model.
That's what the
Canada's,
Americans
yeah,
are going for. They want that model. That's what this push is all about, really. I think.
yeah. Like, I agree 100%, right? Because I think if you look at the way that the sports gambling, online sports gambling regulations are built in the U.S., it's done on a state by state model. Every state has different, you know, economics and
Mhm.
market dynamics, i.e., some states have multiple operators or a ton of different operators and make it easy to get licenses. Some have more concentrated number of operators. And so for incumbents, that's a really attractive uh,
Yeah,
business model because once you're in,
yeah,
it keeps people out, right?
yeah.
These are
It's
strong regulatory
a
moats.
governmental moat.
Yeah.
It's a moat provided by the government, which I don't agree with, but it
Yeah.
is what it
I
is.
think that's what it is. And it's
If
the
you
same,
can
I
pay
think.
us enough money, we'll protect you. Is not what I like from my governments.
So let me use this hook about regulation to talk about one of the questions that I have to ask for Johnny. So this post here is about a potential, what it seems to be a case of insider trading. So it appears that Polymarket account called Maga, my man, made $500,000 in a single day betting on the last night US strike on Iran, with the first trade placed 71 minutes before the news broke publicly. When this person bought in, the market had this at a 17% probability. They turned roughly $87,000 into $500,000 overnight. It's not the first time that we see something related to this. That also happened with the Maduro situation back in December. And yeah, no, before I move to the Kaushi one, let me ask you, what is your take? I mean, I'm assuming I might be wrong, but I'm assuming since you are part of a public traded company, I mean, you are under regulation, so insider trading should be avoided at all costs, right?
Yeah, yeah. This is an interesting one because I think the moral stuff is starting to bubble up more and more on a bunch of different fronts. Um, and sorry, the moral and the ethical questions. Now, the question, if you take even a further step back, is like, has insider trading been happening for the last however many hundreds of years, right? I think the answer is clearly yes, because we've seen people
Mm-hmm.
get caught in
Yeah.
various
Mm-hmm.
different areas, right? So I think it's naive to think that there aren't bad actors in any marketplace, whether it's equity markets, whether it's other derivative markets, whether it's prediction markets, etc. I think
Mm-hmm.
the one benefit of prediction markets is because it's open and transparent. It enables regular people and other types of people to detect bad actors, right, or to flag them. Whereas in other types of markets that are more opaque, you might not be able to see kind of that's happening. So I think actually this is an opportunity for the industry to build tools that can identify these types of suspicious transactions to um, you know flag them for regulators, because in the big picture, like, we need to we need some sort of framework to be able to ensure that these types of trades and others that are acting on material non-public information to be, one, identified, and two, enforced. And I think as the industry starts to mature and the frameworks are built, that it's going to be very clear, what's material and what's not material, right? And like, I don't know whoever this person who this person is. They obviously made a ton of money, right? I can
Mm-hmm.
agree on
Mm-hmm.
that. Um, you know, one of the challenges for the industry is how do you educate all these people on what is material non-public information, what's not, right?
Mm-hmm.
Because I think
Mm-hmm.
for a layman's person, they may not know the difference. Now, I know the difference, being involved in the markets for so long. And I think, like, part of this whole exercise going forward is like starting at the grassroots. It's, you always start first with education, right? Then you start with the regulatory framework built around that. Then you look. Then the next step is really surveillance, right? Market surveillance, and then the last piece is enforcement, right? So if you've got all
Mm-hmm.
four pieces in place, that's like then you've got like a functioning market that's fair and equitable
Mm-hmm.
to everybody. And so that's, we've got to get there as an
Mm-hmm.
industry, and we're not there yet. And it's going to take some time.
Yeah,
I
it's
suppose
it's
it
it's a
becomes a lot more difficult because actually the nature of prediction markets is casual, right? It's a
That's
it's a
and
casual betting tool that allows you to bet on anything, including insider information. I mean, clearly that's the person that did
you can
that was either
you can
right in the circle of the decision makers, or or close enough to hear through the door, like that sort of thing.
so
Um,
so so on that
but
though,
yeah,
like one of the most powerful reasons why prediction markets are so accurate and such a high signal is because it takes all of the information available in the market,
yeah,
which
yeah,
is
yeah,
Mhm.
not just it's not just opinions, but it's actually also taking in all the information,
yes,
which is all this non-public technically information. Whether it's material or not, who knows? But it's
yeah.
it's it's powerful because it aggregates everything into
Mhm.
one giant signal. And I think that's one thing to just keep in mind, right? And like I
Mhm.
say that because not all non-public information is material, right? Like
Mhm.
there are pieces of information out there that is non-public or proprietary. Doesn't necessarily mean it's material. Like, for example, um, say in this case, like, again, I don't know what this person knew or anything else, but
Mhm.
like you could this guy could have very well been using satellites and tracking movements of troops and looking at uh,
Mhm.
you know
Even the
Oil
pizza
the
watch,
prices,
orientation.
even the pizza watch, which is basically open to anyone. Anyone can check
Yeah,
it.
no, like, exactly. Like, if you look at it, if I'm doing the work and I'm using, say like I'm using satellite technology and I'm tracking all the boats and the planes and everything, and I'm all of a sudden see that they're positioning for a strike, and then I
mhm.
go act on that information. Um, that's proprietary information,
Yeah,
right? And
yeah,
so you
Mhm.
could technically, so I
You can
think, like,
technically
it's
do that. Unless
yeah,
unless
yeah,
unless your job does not allow you, unless you are from the military forces or the defense forces, and you are by your employee not allowed to do that, to share that information, you can't. But if it's your proprietary information, as you said, That's not insider trading.
Exactly. So I think it's easy for people to just instantly jump to conclusions, right? And that's why I
Mm.
preface this whole thing was like, I don't know this guy, I don't know what he knew, I don't know
Mm-hmm.
any of those
Mm-hmm.
things. I think that's why it goes back to my fundamental framework, which is it's about first educating people on, what's technically legal, what's not legal. It goes to the other piece, which is, setting the rules so it's clear to everybody. The third piece is surveillance, which is, hey, if there is something that's suspicious, you flag it. And then the last piece is investigation and enforcement, which is, look, if you go to this guy and he can prove to you that this is how he figured it out and all this other stuff, and this is why he was able to, you know what, the guy put in the
Mm-hmm.
work, and he was tracking all these things, and he came up with a fundamental thesis that made sense, and he made
Mm-hmm.
money off it. Like, all the
Great
power
for
to him,
him.
right?
Yeah.
And I think,
Yeah. Yeah.
yeah,
Yeah,
and like I
Yeah.
think
exactly.
we all do that, and it's no different than
Yeah.
like somebody standing up front of an Apple store and counting how many people come in and out of the Apple store and asking them how many phones they bought and everything
Mm-hmm.
else, right? And trying
Yeah,
to
yeah.
take
Mm-hmm.
that information to build a thesis around buying Apple stock, right?
Yeah.
It's the
Yeah.
same kind
So
of concept. So again, we'll see.
something that
I'm not,
yeah.
this is a little suspicious. So I'm,
It
I'm not
is.
going to
It is.
say
Well,
it.
Yeah. Yeah.
I'm not going
a,
to
But
say
a
it.
anyway, I
comparable,
think something
a
that's
comparable.
really go ahead, Nick.
I just want to say a comparable suspicious moment was the Nobel Peace Prize, where it went
Yeah.
from nobody knowing
Mm-hmm.
anything, but that was somebody finding that was totally innocent. That was somebody found a file on the server, right? They found that information on their own, so it wasn't insider trading. So there's a lot of
Mm-hmm.
things that people shout insider trading, which actually might be just really clever due diligence.
Mm-hmm. Mm-hmm. And what anyway, I mean, if it was or it was not an insider trading, what gets my attention is that the big trade was placed over 1 hour before the information came out. So as a source of aggregating good information, prediction markets has been proving themselves over and over.
Yeah,
And about
yeah.
this topic, I just want to give a shout out to Aaron here about this article on war markets. It's really interesting. I don't fully agree with everything, but it's an amazing article about this topic about inside information and the war markets. Talking still about insider information, just wanted to highlight this situation. So everybody remembers about the XBT expose market last week, and people started
Mhm.
to highlight the fact that by the way that he did the expose and he announced that there will be an expose, there was a chance. He created a chance of people creating market on that and the insider trading on that market as well. And it was interesting because it seems there was an insider trading on that market as well. So I investigated the source of funds for Predictor XYZ, as I agree, 70K USDC fund on a newly created. So basically, what happened? Polymarket and Cauchy, they had these markets on which protocol would be exposed by ZachXBT, and a new wallet just deployed 70K $1,000, and they were correct about who would be exposed, and people started to complain on the internet. So okay, ZachXBT was about to expose someone and actually created an opportunity of that person to insider trading on that market as well, and it was fun. So man, the ball's on insider trading, on insider trading. So we need a poly market now as to whether or not this was an axiom insider trading, and then let in insider trade on this market for a third and final win, which is kind of the situation that we have right now, unfortunately.
Yeah, like,
So
I mean, from my POV, uh, a lot of these things I think are need to be addressed, because I think the danger with a lot of these things is they're very extractive, right? And I
they are,
think
yeah,
people, that I talk to, whether it's on taking this back to TGEs or other kind of things, like a lot of products out there are inherently extractive, and if you want to be building like a sustainable long-term like ecosystem, I think you do have to create an ecosystem that compounds. Like, there's the reason why the stock market has been around for so long is because it compounds wealth over time, right? And if you look at the most popular uh, investing products or investments out there, whether you look at like gold, real estate, Bitcoin, uh, the equity markets, like all these markets, they compound over time, i.e. they grow over time, right? And so like, that obviously within that market, some people perform better than others and some go to zero and other things. But as a general rule, you want that industry to start to grow, and start from the bottom left to the top right in some form or the other. And I think that's like the risk of a lot of these things out there is there's always going to be guys that are trying to extract, and when they extract, they actually damage the industry. And so we need to,
the industry as a whole,
like they do, right? Because I think nobody likes to lose money, right? And if you do lose money, you want to lose money knowing that it was a decision that you made yourself.
It was your fault, right?
Yeah.
It was
And
not
it's your fault, right?
else.
Exactly. What you don't want is you don't want to lose money. Like it's like the classic thing. It's like you want to.
Yeah,
it's like
it feels unfair. If it was your fault, okay, you were wrong. But if it was someone else's fault, it feels unfair. We don't want unfair.
Yeah, like you want to go down on your own terms.
I get it.
You want to go down on your own terms, right? You don't want to go down some random thing, right? So
we could say that there's a kind of fundamental issue around prediction markets and that topic. Like that's, I wouldn't say baked in, but it's not been addressed because we see it with betting exchanges, peer-to-peer betting exchanges, where your counterparties might be just much smarter than the general public, and the general public who are betting in these markets end up as fodder and lose all their money, and then get really pissed off and leave the platforms because they're not as fair for them as, for example, a traditional sportsbook. So there's a whole that hasn't happened in prediction markets yet, but it has happened in betting exchanges. I think Bet365 was one of them where, the person you bet against is highly intelligent, understands the market far deeper than you do, and you're putting bets in and you're just losing all the time to these people. But I don't even know how you begin to address that. But it's basically, how do you protect uneducated users from educated users in essentially a peer-to-peer market?
Yeah, I think that's always, I mean, like in any kind of market, right? Like, and I like to use analogies because they're important. Like if you look at equity markets, right? Like you've got sophisticated other people in there, whether it's hedge funds, whether it's quant funds, whether it's all sorts of different sophisticated investors mixed in with a bunch of retail investors, right? And then and I think in the same dynamic, like you want to protect people, etc. The nice thing about the equity markets is that it grows over time because these companies are producing something and growing their business. I think when it comes to prediction markets, we just have to be careful that we don't create an environment where a lot of things that I would just classify them as like unhealthy start to happen, which is a lot of these guys coming in here just to extract a couple bucks and moving on without contributing back to back to the ecosystem in some form, right?
We essentially don't want the meme coin behavior exploding across prediction markets because it will kill everything. Like meme coins has basically killed crypto.
Yeah. No, I didn't want to say that directly, but you read right between the lines of what I was saying.
I have a very hard line on that shit with Pump.Fund, and they did more damage than good for a crypto in general. And Trump with his final with his token a year ago now, basically was like the final nail in the coffin. All the liquidity went there. Then the money, just the liquidity left that token, and everybody was left with no bags. And that was it. Crypto was over for a few years since then.
So on that point, right? It's like when you go to your buddy's house to play a cash poker game, and then he wins a big hand, and then he just takes up at
I
least.
don't.
You're
I don't
like,
want to
So
play
that,
anymore.
yeah,
Like,
like what are you doing, dog? Like,
I'm
like
out.
that is like you got to let me win that shit back. What are
Yeah,
you trying to
exactly.
do?
It's only
Right with the
fair. It's
Trump,
only
like
fair.
the Trump thing, right? Like a lot of people made money. I was lucky; I made money on that, which is great, right? But but then to your point, a lot of those guys, especially the guys that made the large sums, they took that and then they just bought a house, they bought a Lambo, they did this,
Yeah,
they did
super.
that. They
Like, yeah. Super yacht.
and
They just bought shit. Like, it's just
yeah,
that was it. And other people were left with nothing.
yeah, agreed. So
Yeah. So guys, we got to the top of the hour. I still had some topics here to cover. Just want to give a highlight here of what's coming tomorrow on the newsletter. There was this discussion about deaf markets, which it's questionable, but there was this big discussion because the fact is that Cauchy they ended the market on so they didn't since the leader of Iran was he died during the war. Cauchy closed the market and people got whatever was the position they had at the time. You know, they had a special rule that the market will not resolve in yes or no if the guy died there. And there was a lot of
That's a
discussion
strange one,
around
isn't
that.
it? That's a bit
It
strange.
is, but it was, I mean, I don't have a clear opinion on that, but it seems it was on the rules. That is the discussion. I mean, the rules of the market is stated. They had these they wanted to stand like this. I agree with this guy here. I'm going to post this link on the newsletter as well. Basically, what he's saying, and he makes an analogy. So basically, essentially, every market could be related to someone's death. So
Yeah.
if a guy who plays like the top player of a basketball team, if he dies, the market will resolve in this or that way he was supposed to play on the game. Or if you're buying Tesla stocks and Elon Musk dies, that will hit the Tesla stock. And I mean, basically any kind of event could be related with someone's dying. But it was a choice from Cauchy to not resolve that market in yes or no. There's also Cauchy being traded on the flow front end right now on Solana. Okay, some from John Wang. Oh, this is really interesting. So Ivan, and we always cover some of his content. He made two posts here. How he was correct. His analysis was correct about the war, but he didn't trade according to his analysis, and he lost money. And it seems it was like 2 months in a row that he's losing money. The guy is one of the best traders in prediction markets, and it's good because nowadays, I mean, not that he's good that he's losing money, but he's good that he's sharing his
Yeah.
experience. Because I mean, all the time I see, oh, how I create a bot like in 5 minutes, and now I'm creating $1,000 every
I'm a
day.
millionaire. I
It's
have
something like
Lambos and
that.
super yachts. Like, go me.
Yes, and
yeah,
people tend to believe that all of that shit is true, and you will pay like $20 on a bot, and that bot will make you a millionaire. And now we see one of the top traders in prediction markets sharing his experience and saying, guys, it's not like that all the time. Sometimes even when you're right, you can lose money. You need to control your emotions, all this kind of stuff.
yeah, like on that, right? How you size bets, how you get exposure. This is all these are like the important things that traders, I think, across asset classes have to understand, right? Because to his point,
Yeah,
you could be directionally right, but if you don't
correctly. The
structure,
timing.
yeah, like if you're not properly sized, or you're not using the right the right asset to get the exposure on, like you could still lose money, or you could not make as much as you probably should, or other things, right? Like these are all important factors. I think it's cool that he shares a lot of that
Yeah,
with his
it is.
Yeah,
followers.
Yeah,
that's good.
yeah. It brings more reality to the space. To be honest, it's not
And people
about.
learn how to trade and protect themselves because that's what we
Yeah,
want. We want people to know how to. It's back to the education piece. We want people to be able to trade not just by following people or copying people, but by understanding exactly what they're doing and how they don't get in trouble.
yeah. So I was talking to Grok these days, and it seems so. I asked about the polymarket partnership, and it seems that if you ask about probabilities related to polymarket, Grok can feed that to the timeline. But I mean, placing bets straight from polymarket is doesn't seem to be on the timeline so far. Shout outs to our friends from Mimico and Prediction Markets. They are talking about a new way to place your predictions in a kind of a bracket game structure, which is interesting, and it's actually tailored for what's coming with the FIFA World Cup. There was this interesting market about this insider trading related to the war markets. Fuck, I hate you, New York Times. You have this paywall, but how amateurs, gamblers, how they say, are beating people on from PhDs from the stock markets. Also, this article on war markets that I mentioned, uh, and that's it. So, Johnny, one last
Yeah.
word for our viewers, for our listeners. How do they follow prospect markets? What should they do? It's your chance. How do they keep in touch with you guys?
Yeah, no, thanks. Well, first, I wanted to just thank you guys for having me on. It's a lot of fun just covering a whole bunch of random topics. Hopefully, brought over some new, different, and unique perspectives that other guests or others haven't. And would love to be back on with you guys in the future, especially as we start to launch the product and everything else. I think the best way to just keep in touch with us, whether it's on X, we LinkedIn. We've also post pretty regularly on there. I know it's not what everybody uses, but whether it's X, LinkedIn, add our stock to your ticker watch list.
Hmm.
Keep an eye on that as well. And then if people have any questions, like feel free to reach out. Today we're actually trading up. It's a bit of I was just looking at the prices. Bit of
There
a
we
rough
go.
day, but we're up a bit today. So I think this is from yesterday. Yeah,
Yeah,
I think
yeah.
it's
It's
still
just not.
delayed.
I think so.
It's
Yeah,
a 15-minute delay, so you'll see. But
yeah,
yeah, keep track of our company, and we're always open to follow on conversations.
yeah. So it's prospectmarkets.com and Prospect Sports X on X. All the links you can find on their webpage. Johnny, it was great having you. Thanks for sharing your thoughts. For sure, you added a lot to the conversation, and that's it, Nick. Thanks for
Yeah.
hosting with
Thanks
me.
for coming.
Yeah,
Thanks,
see you
Diego.
guys
Thanks,
on
Nick.
the next
Appreciate
show.
it.
See you guys.